No investor really wants to sit down with you for an hour, right, to listen to your pitch. They want to know who you are, what your value proposition is, why they should invest with you, and what your deals are. They want to know that in their own time, and they want to consume it in the most convenient way for them.
Welcome to the Rental Property Owner and Real Estate Investor Podcast, brought to you by the Rental Property Owner Association, providing benefits and services to real estate investors and rental property owners for over 48 years. With your host, Brian Hamrick from Hamrick Investment Group.
This episode is sponsored by Green Property Management, managing everything from single-family homes to apartment complexes in the West Michigan area. Find out more at greenpropertymgt.com. Hello and welcome to episode 242. Up until early March, we were in a booming real estate market with high valuations and a bright economic future. Now, seemingly overnight, we find ourselves in a new kind of recession, and it's hard to see just how it will end and whether real estate will hold its value. One thing I can tell you from my experience going through the last Great Recession is that there will be incredible opportunities for those who have the capital to go after them. And that's what we will be talking about today. How do we find, educate, and prepare investors for the real estate opportunities that will be available in the next 3 to 12 months? My guest today, Dr. Adam Gower, is considered to be one of the country's foremost real estate crowdfunding experts who founded his company, Gower Crowd, to assist sponsors and developers raise unlimited equity capital online. Adam is a published best-selling author, and he has decades of experience in real estate investment and finance. Adam is going to share how he's prospered during the past downturns and how you too can begin putting systems in place that will ensure you survive and thrive during this coronavirus-inspired downturn that we are all experiencing. Adam, welcome to the show.
Thank you. And can I hire you as my PR guy, please?
Yes.
That was a great intro.
I want $2,000 an hour. So I want to start off just at the top saying, okay, given your experience in the savings and loan, the last Great Recession, I'm sure you went through the other dips and valleys in between. Where do you think we are now, and what's your outlook for the future?
Yeah, so that's obviously the big question, isn't it, right now? Candidly, Brian, I have to tell you, I have a very optimistic outlook at where we are currently. Today, right, and we're right in the very, very depths, right, of as bad as it's going to get. But I am confident that we will pull out of this. I actually did a podcast a couple of weeks ago with a guest who thinks that this is a mid-cycle downturn. Excuse me. And that really the economy is fundamentally sound, and this coronavirus is what's knocked us off tilter. So clearly there is going to be some blood in the streets, right, to coin a phrase. There's no doubt about that. There will be some of the weaker participants will simply not survive it for whatever reason. But fundamentally, the economy is sound. There's a lot of cash in the economy. A lot of investors looking for capital. There's still liquidity. So once we peak the crisis that we're in now, I think you're going to start seeing an uptick that will probably, my guess is, be more rapid than the 2008 downturn. It's a very different environment this time. Quicker down, quicker back up.
Just to give our listeners a little bit of context about who you are and your experience with real estate and money, can you fill us in on the basic details that we need to know about you?
Sure, I'd be happy to do that. Right. So after I finished helping to build the pyramids, I go back that far. So savings and loan was the first major downturn, the late 80s, early 90s was the first downturn that I went through. And it was the one during which I lost everything, right? So you've got to lose everything at least once to know what you're doing later. So that's what happened. I'd made a lot of money on paper and it just evaporated. Then the second downturn, well, the next major one was the global financial crisis of 2008. And in 2007, I had the foresight to sell my entire portfolio. So I went into the '08 downturn with dry powder and no legacy problems, and ended up working in a bank. Was actually one of my investors that I'd exited for was on the board of directors of a major bank. And so invited me in. And so I dealt with a vast portfolio of non-performing loans, actually, all real estate collateralized, all commercial real estate. I didn't do any single family homes at all during that time. And then from there, I went on to Colony Capital and was part of a group over there that was working on a $7 billion portfolio. So in the end, I worked on I personally handled over $1 billion of non-performing real estate collateralized loans, actually, during that time.
I definitely want to talk about the non-performing loans, the $1 billion in assets that you controlled at one point or worked with. But let's save that for later in the show, because I do want to talk about Gower Crowd and crowdfunding and just how important do you feel knowing how to raise money, and especially doing it online, is to investors who are looking to take advantage of some of the opportunities that we're going to be seeing?
So it's a really good question. Look, it is fundamentally important that you have an online presence, Brian. I mean, it's just the bottom line. Everybody has been sent home, right? Basically, everybody seemingly in the world is working out of their home office at the moment. So if you have not got an online presence, for whatever reason, because you are used to raising money in person, now is the perfect time to get an online presence. Not only is it absolutely essential, because if you don't have one, you simply cannot function unless, you want to be on the phone 24/7. And it's also something that will give you incredible resources and influence post-recession, right? Post this crisis. So you have to have an online presence. You have to be connecting with investors and suppliers, with tenants, everybody. Now is a time to up your communications game. And you can do it online, and it's really not that difficult to do it. But I forgot exactly what you asked me.
If you don't mind, why don't we just start with talking about crowdfunding? What is it?
Okay, I know when one has been in any kind of industry, it's easy to forget that some people don't really know. So I'm really, for those of your audience.
Assume I know nothing. That's what I tell everyone. Assume I don't know anything.
We'll go with that. So historically, the only way that you were allowed by regulations to raise money was in person. You had to have a personal relationship, a pre-existing relationship with an investor to be allowed to solicit from them. It was a 1933 Securities Act. In 2012, the law changed with the Jobs Act. What the Jobs Act basically said was you no longer need to have a pre-existing relationship. And what that did was it switched on the ability for real estate sponsors to advertise. So simple as that. I mean, if you really want to get it down to its basics, before 2012, you couldn't advertise, now you can. And what advertising means in the 2000s, right, the digital age, it means going online. It means having an online presence. It doesn't mean you need a billboard. It doesn't mean you need to do Google or Facebook ads. It means you have to have a presence online. You can advertise your business and your deals on social media and on your website and via email to people you've never met before. So that fundamentally is what is crowdfunding. So what I do, actually, funnily enough, I was thinking about this. When I went through the last downturn, I actually created an automated email system, auto email system. There was no such thing then. As far as I know, there was no auto email systems like there are today. When somebody sends you an email or they click on a link, they automatically get a sequence of emails. But I actually built one because what happens when you go online is that the volume of activity that you get can become so vast that it simply is impossible to do it in person anymore. You have to automate the whole process. And it is because of that it is so powerful, right? Instead of raising money from somebody in person, I've raised over $500 million in my career in equity capital. And I've done it entirely in person, showing up at a meeting. It's just some of the brain damage I can think of, showing up again and again and again at a high net worth investor's location at their convenience, schmoozing and talking and going through the whole rigmarole. The term I heard when I was first in the business in the 1980s was the dog and pony show. Right? Basically, going through it is a lot of brain damage, and very, very inefficient.
What were you raising money for at that time?
So in the 1980s, to really date myself, I was raising money for ground-up multifamily developments. And I actually raised in 80s dollars. So today it's actually a lot more, about 30 million. Today, I don't know what that's worth. Probably you could double that multiple times actually to have an equivalent for today. And we had, I remember standing in front of boardrooms. My job was to pitch, basically. So we would have people come into the boardroom, and I remember sitting around, basically presenting these deals online and going through the Q&A, going through pro formas, producing pitch decks in paper, handing them out, driving to people. And it was just, that's how you did it, right? And probably that's how a lot of people continue to do it.
Yeah, up until 5 years ago, that's how I was doing. It was very in-person, paper-driven, mailing or delivering investor packages, subscription packages, getting paper copies of everything.
Right. Well, the beauty of doing it online, check this out. You're doing the exact same thing. There is no difference other than your entire pitch, the entire process is committed to digital format. So instead of a paper document, you would have a digital document, like a PDF, for example. Those follow-up calls, right, that you would make. Every time you left a meeting, you'd say, what's the follow-up? All right, the follow-up is I'm going to send you this. You're going to send me that. We'll meet again, et cetera, et cetera. The same thing exists exactly in the digital world in what's called a CTA, a call to action. So every single piece of information that you put out there, every single article or video or podcast that you put out there has a link on it that says, to find out more, click here. That's your follow-up. And that's how you nurture investors in what's called their investor journey, their journey to getting to know you. And as part of that process, they will consume multiple pieces of information from you instead. By the way, no investor, as fabulous as you might think you are, right, or we think we are, no investor really wants to sit down with you for an hour, right, to listen to your pitch. They want to know who you are, what your value proposition is, why they should invest with you. They want to know, and what your deals are. They want to know that in their own time, and they want to consume it in the most convenient way for them. And the most convenient way for them might be an article on LinkedIn. It might be a video. It might be a podcast. It could be any number of ways that they consume that knowledge about you, but they want to do it in their own time. And so the way to transition from analog to digital is basically to replicate exactly what you are doing in the analog world, but to create content from that goes out on the internet. The beautiful thing about doing that is that it becomes an asset to you, because now your pitch is working for you automatically online. You don't have to go through that dog and pony show anymore.
Let's go back and just start with our target audience. Like, not everybody is the right investor. In fact, 99% of the people out there are probably not the right type of investor for whatever you or I or any of our listeners might be raising money for. So how do we target who it is our audience actually should be?
Right. There's a few ways of doing that. The first thing is that you want to be communicating your content in a way that is utterly true to who you are. Do not try to create some kind of fake avatar, right? That's number one. Be yourself. Be confident that you are an expert in the field, in your field, and speak as though you were in front of the ideal investor. So first picture, who is that ideal investor? It's called an investor avatar, right? Define who that person is and then speak to them in those terms in all your content. What that will do is it will attract exactly that kind of person. So that's a very organic initial approach, right? Only speak to high net worth investors, ideal investors, when you're creating your content, and that naturally will resonate with your ideal investor out there in the Ethernet, right? Or on the web. Another way to do it is you can actually create some pretty high level targeting using data online and identify, if you're advertising, for example, if you choose to do Facebook or Google advertising, you can identify demographics very tightly and target the people that will see your advertising to very, very tight demographics. There's actually another way that we do it, Brian, we actually also have become quite specialized in list acquisitions as well. So we will buy lists, and with those email lists, it's a very tough space to operate in. You got to be very careful. There's a lot of moving parts to it, but you can actually acquire lists that are very, very demographically focused, that will give you a list of accredited investors in specific industries and specific locations that you can start communicating with. So those would be three ways of doing it. Also, the other way, also important, is you've got to think about the media that you're using. So you want to have a good, intelligent, well-stocked website with a lot of high-level information and data, educational information there. But you also don't want to probably be using TikTok to try and find investors, right? And the ones that we really focus on are YouTube. We produce a lot of content on YouTube because it's the second largest search engine, only to Google. But YouTube, LinkedIn, Twitter, and Facebook are the ones that we primarily occupy. And I would say probably, based on the data I see, I get more links to my site with LinkedIn, interestingly, than anything else. LinkedIn, Facebook, and Twitter in that order.
I'd like to take a moment to tell you about Green Property Management. Not only do they manage everything from single-family homes to apartment complexes in the West Michigan area, they also manage my entire portfolio. So I can tell you from personal experience that their unique flat fee management style is worth a closer look. If you feel that your property isn't operating to its fullest potential, then Green Property Management can help you take a holistic approach that will save you money, eliminate your headaches, and increase your net income. And if you're a property manager interested in applying Green Property Management's model, give them a call at 1-866-95-GREEN or visit them on the web at greenpropertymgt.com. So are you creating content then that's going on YouTube and LinkedIn and Facebook?
Absolutely.
And how often are you doing it, and what are you creating?
Yeah, you got to be really effective. You got to be a content production machine. It's just about content. So I'll give you an example of how we do this. So for example, I will take a podcast episode like this one, right? So I'll grab the video, and we will create two sets of data from that, or two sets of content, right? So you start with one piece of content. Let's say it's a 45-minute podcast. And from that, you've got one episode, right? Fair enough. But what you can also do is to break that down into sound bites. So we will create sound bites from a video of a podcast or whatever we happen to be recording. And we might get, depends on the episode or on the conversation who I'm having a conversation with, but we might get anything from 7 to 10 short videos. Okay, so now we're at 11. Next, we create what are called, my favorite is notable quotables. So notable quotables are single sentences that stand out, that are profound, right? Basically, impactful. Of course, I never say any of those. It's always my guests, right? But basically, we'll take a quote, create some gorgeous graphics, and put that out online as well. And this is all top of funnel stuff, by the way. So all of this is entry level. This is first contact that somebody might see. Number one, it's first contact. Number two, having this amount of content also reinforces your message. It makes you very visible on social media. So people who are getting to know you see you all the time. It has to be branded so that no matter when they see it in a feed, when somebody sees it in a feed, they know it's yours. So out of a single podcast, we might get 7 or 8 notable quotables. So now we're up to 18 or 19 pieces of content from one single episode. Plus, what I like to do is to create thought leadership articles from that as well. So we'll take the transcript, we'll transcribe the content, we'll create an outline, and then write anything from either 1 or 2, depending on the conversation, 1 or 2 articles. So out of a 40-minute conversation, you can create 20 pieces of content. You asked me, how do you create content? So that's how you do it. You take one piece of content. By the way, you don't have to record a podcast. You don't have to be a podcaster. You can do this at home. There are some very basic tools that you can use that are actually either free or very, very inexpensive.
What are some of those tools?
Camtasia, Canva, Audacity, Sonics, etc., etc. These are editing tools, transcription tools, creating beautiful content, right? Thumbnails and featured images, etc. I mean, these are all easily accessible. And candidly speaking, they are super easy to use once you know how to use them. Mm-hmm. The problem is the learning curve. So there is a learning curve that you do have to go through. But if you've got the patience, you can accelerate that learning curve.
So let me ask you, creating all this content and educating people, how does that actually translate into raising money from high net worth investors? Is that really what they're looking for, is more content to take in, or are they just really looking for credibility and they just need to watch 10 seconds to know, okay, well, you at least know what you're talking about?
Look, it's exactly the same way as you have been raising money before, right? It works the exact same way. Look, I've been through this. And the way that it works in person with high net worth investors is that you have to meet them multiple times. Nobody's going to sit down at a first meeting and write you a check, right? You've got to go through. They want to know your background. They want to know what your experience is, where you come from, try and make a personal connection of some sort before they get to the deal. And the way that it works online is the exact same way as meeting somebody multiple times. If they see your face, you create a relationship with somebody online. Think about anybody at all, I don't care who it is, that you know online. The biggest names. How do you have any regard for that person? It's because you've seen them so many times. They have given you value. That's very important, by the way, that you have to give value. You can't online just talk about how great I am, right? Here's my deal. I'm great. Nobody wants to hear that. You have to create a reciprocal It's actually a psychological response in investors online or in viewers online, whoever's consuming your content. You have to create a psychological response of a desire to reciprocate. And the way that you do that is by providing value. So everything that you put out has to have value for prospects. And that might be educating them about how to use an self-directed IRA, right? Completely unrelated, not completely unrelated. It has to be related to what you're doing, but it's tangential. You're not pitching a deal. You're providing value to your listeners or to whoever's reading your content. So that's very important. And I'll tell you that having been doing this for a while, it is actually remarkable how tight a relationship you can create with people online. It's the reason I am so excited by this world. And I'm an old dog that's learned new tricks, Brian. Basically, I've come to this world from having been a social media content marketing troglodyte. I basically knew nothing about it. The reason I find it so exciting is because I see it myself and how it works. I get calls from people who say to me, I feel like I know you. I feel almost privileged. And I don't mean this with any kind of conceit of any sort at all. It's a fact of what happens. People will come to know, like, and trust you because of the content that you put out there. You can create a relationship online with high net worth investors by putting out good content. It's incredibly powerful. It's more powerful than sitting down with somebody and talking to them. And a day like today, like the day of coronavirus, here we are, life in the day of coronavirus, where you are not permitted to sit with somebody in person. You have no choice but to have a presence online, to do it remotely. And so, for example, this conversation that we're having now, I'll stop in a second because I can see you wanting to get back in there, and I know I go on a bit. But for example, if you have a conversation like this and you take this clip that you're talking, right? You have a conversation with somebody on a Zoom call and you're pitching your deal or you're explaining your background, take that recording and put it on your website. You don't need to say it 1,000 times or say it again and again and again. Put it up on your website, and anybody watching that will learn exactly the same as the person that you said it to live.
For those who are listening and think to themselves, well, I really don't like my voice. I don't like the way I look on camera. Does this content we're putting out, does it have to be audio visual, or can it be a different type of content?
Yeah, so that is very much dependent on the individual. It's as simple as that. You can create written content. Let's think about it. You could do written content, you could do audio, and you can do video. You can do video that is live video, like we're creating now, right? With your face, right? There you are, for the world to see, warts and all. Or you can create video that is voice over slides, for example. If you've got a pitch deck that you go through that describes your background, for example, or the way that you understand a particular concept, say the IRR cap rate or whatever it is, and you've got a presentation that you make, you could just as easily record yourself presenting that and then superimpose slides on top of your voice. And now you've got another kind of video. So everybody is different. And my advice to my private clients is, let's just do what is the most natural for you. Some clients, they like video. They're more than happy to do a video, and then I can slice and dice that. By the way, video is the most powerful because you can create the most from that. You can create video segments, audio segments, notable quotables, articles, etc., etc. So it's very powerful for compounding the content that you get. Very efficient to do video. But if you don't want to do video, you can just do audio. That's fine. Or you can just do written content. It's totally fine. Written is perfectly acceptable. It's not as powerful as video, but it's better than, it's significant. It's a different league than doing nothing. It sets you apart.
What are some of the other basic tools that we should have to get our credibility out there online?
Super great question. So I love that. I have a analogy. Is it an analogy? It's an analogy, right, that I like to use. Having an online presence is like, or building an online presence is like building a car. It used to be, actually, I'm going to now mix my analogies, but it used to be that you needed a business card. You had to have a business card to transact, right? You handed a business card out. Then you needed a website. That took the place really of a business card. I stopped using business cards altogether. You have a website. But anyway, actually, let me get back to my main analogy. And that's, it's like building a car. So the first thing you have to have really is a good website. But the website itself is like the body of a car. It's like having a beautiful car in the driveway, but with no engine. So you have to have an engine. And the engine in the digital world is the functionality behind the website. The very simplest, most basic one is a call to action on your homepage that says, learn more, right? Or join our mailing list, or join our wait list, or get this case study from us, or this white paper for free. Give me what? Your name and email address. And then when somebody does that, they're automatically delivered whatever it was that you said you were going to give them, plus an automated sequence of emails that educate them about who you are. So that, at a very, very simple level, is the functionality of the website. It's not just a beautiful thing. Like the car, you don't just want a body, you need an engine, right? And the engine is the functionality, how you automate everything. But it's still no good, right? If you've got a beautiful car in the driveway with a strong, powerful engine, if you don't have fuel. You have to have fuel, and content is the fuel. You have to have, you create relationship by creating content. So the website is mandatory. The engine is important as well, but the content, and those two things you can set in place fairly easily. Once you've built it, it's there. Then you just put fuel into it, like a car. You have to create content.
And how do you get that functionality of your website to automatically follow up and send out information and communicate with your potential investors?
That is what we do here at Gower Crowd. We build these systems. So to kind of make it clear what we do, we have taken the real estate is late to the digital marketing game, to the content marketing game, because it was prohibited to do it until just recently. So what I've done is examined best of class practices from other industries. How have other industries been disrupted, and taken the best of class practices and tracked the best practitioners in commercial real estate since the laws changed. And those systems look like this. You have to have, you need an auto responding email system. You need to have automated social media posts, so you're not sitting on your phone all the time. These are the tools that are built into the engine. Then analytics are very important as well. So when you start sending out emails, you want to know not just who is opening and clicking on your emails and on the content in your emails, but you want to know who is spending the most time on your website. So you want to have that kind of tracking ability as well. And all of this is readily available right? So we build these for clients. I mentioned earlier, we also train people to do it themselves. They are, look, it took me years to figure it out, Brian. I'm not going to kid you, but I like to think of myself as somebody who is ultimately bone idle. As hard as I work, I'm totally lazy. And so I work extremely hard to avoid work, right? And so I've created these systems that are extremely efficient. And the biggest problem with building these systems, by the way, is that they are so complicated that you can be distracted by all the functionality that there is within them, right? It's just, you get onto one of these pieces of software and it's just overwhelming because they're used by mega pros. So there's all thousands of bells and whistles, but to get from point A to point B is a straight line with maybe only 5 or 6 points that you really need to know. And that's what we have refined in the digital courses that we put together.
What about a brand and a logo and just the name of your company?
So one thing that you really do have to have is a brand guide. And a brand guide has exactly that, has a set of colors that relates to your brand, ideally a primary set of colors. So that's going to be 3 or 4 key colors. And then I like to have a secondary set of colors that relate to the primary set because I produce so much content. I don't want to be stuck to just one set, just 4 main colors. So you want to, that's the first thing, colors. The second thing is a font set that you're going to use across all of your media. And then the third is your logo in whatever forms you have it, right? So you're going to have multiple different forms of your logo. And the reason that the brand guide is important is that on every single piece of content that you produce, you will use those components of your brand guide so that anytime anybody sees anything that you have out there, they know it's yours and they associate it with you. It's also very important.
When you talk about building credibility and putting content out there and branding yourself, can you give us examples of ways people have done it wrong and ways that people have done it right?
Yeah, the best way to do it wrong is not to do it. It's as simple as that. It is utterly necessary to have an online presence. Don't fear getting it wrong. It's as simple as that. I like to say that that perfection is the enemy of the good. If you try to make all your content perfect, you'll never get anywhere. Just get stuff out there. The thing is that the beautiful thing about putting content out is you can track interaction in the market, or you can see how people are interacting with it. So if something is getting no traction, change it up a bit. If something is the crowd, right, will tell you if you've got something right or wrong. I go back to my first podcast, Brian. I refused to listen to it. The first one I did. I'm kind of embarrassed to even imagine listening to that thing. It's an evolutionary process, but don't try to be perfect. That's my advice. Just get stuff out there and be confident in who you are in your own voice.
One of the things I want to make sure we talk about is not everybody who's raising money for syndication or a fund can solicit or put their content out and say, hey, I've got this great deal. So real briefly, when you talk about crowdfunding and was it the Jobs Act?
Yeah, Jobs Act 2012.
Can you just put in some sort of disclaimer about checking with your attorney to make sure that you're doing the right type of fundraising that allows you to do what you're talking about?
Yeah, so what I'm talking about, I am not an attorney, first of all, so I don't give legal advice. And as I mentioned earlier, I have a rule. It's the AAA rule. It works for attorneys as well. If in doubt about or anything at all legal, ask an attorney. Right? End of line. That's the main thing. I don't give legal advice. However, what I do is not solicit money. What I'm talking about is not soliciting. What I'm talking about, and check with your attorney whether or not they agree with me. I'm talking about educating. This is strictly educational. Your content is not going out there saying, please wire me a check, right? You're not soliciting, you are educating. This is what a cap rate is. This is what this market looks like. This is what you need to do during a downturn. This is how to recession-proof your portfolio. This is why real estate is a great opportunity, for retirement or whatever. You are educating. At the point when you start to ask for money, in other words, I have a deal I would like to raise money for, at that point, you need an attorney to advise you on what you can say online and in emails, etc., what kind of disclaimers and etc., etc. So what I'm talking about is not solicitation, it is education.
And when we talk about raising money online, just how much money can someone raise online?
Well, it really is limitless. It is entirely dependent. So here is a disclaimer, right? Anybody that follows any of my advice or looks at any of my courses, etc., the disclaimer is not everybody will raise even a single dollar. You could build the most sophisticated world-class investor acquisition system that leads everybody in the industry, and it will fall flat on its face if your deals don't make sense. The only thing that actually raises money is the deal itself, right? And your background, etc., and the way that you've related to people. But unless you've got deals, you don't have anything. Plus, the way you structure your deals is really critical as well. So that is the driving force. So to put it into perspective, as far as how much can you raise, CrowdStreet, right? They're one of the big players in the crowdfunding industry. Just announced they had raised $1 billion. That's with a B in equity since they were formed. KBS Direct. These are all guests, by the way, on my podcast, not trying to counter your podcast or anything. But KBS Direct are raising also $1 billion in capital using crowdfunding techniques. If you look at Fundrise, they raise obscene amounts of money, actually, even on a daily basis. So the potential really is unlimited, but it is dependent on the quality, ultimately, of you, your background, and the deals that you have to offer.
And I'd like to bring it back around to the opportunities that we can hopefully expect in the next 3 to 12 months. 10 years ago, during the Great Recession, you oversaw $1 billion worth of non-performing notes in the commercial world. Can you just talk a little bit about that? What you saw, the types of opportunities you saw then, and do you see that happening again?
Yes. So this time is different. It's different, but there are similarities. So during the global financial crisis of 2008, 2009, there was no health crisis, but the damage to people's lives was through the foreclosure wave. People were being turfed out of their homes. So there was definitely a human tragedy side to it during that era as well. Last time there was a financial crisis. There was a meltdown of the financial system. So we were peering over the precipice of systemic collapse in the financial system. It was very, very scary. In the same way, today, we are peering at a financial crisis now that is potentially very scary. But it's triggered by something that we are seeing resolving around the world, right? You look at, as we sit here today, various countries, various locations in the United States already beginning to experience peak events, basically, right, in terms of coronavirus. So there is reason to be optimistic that we will emerge from this sooner or later, but that the underlying economy is stronger than it was going into the last recession, because the last recession was the peak of the real estate market, and that had an impact on the banking, the world of banking. This time, banking was strong, real estate was strong. This is something out of, what's it called? Is it called out of left court or something? I'm not even sure.
Out of left field.
Out of left field. Yeah, sorry, something like that. I knew something like that. This is out of left field, but once it goes away, which it will, the game will continue. And so, like the last time, there will be opportunities. They will look different this time than they did last time, but there will still be opportunities for savvy investors with dry powder.
And then as we wrap it up, what advice or final thoughts do you have for our listeners about positioning themselves for when this does change?
I would say start now. So there's three types of communication, or when you're putting out your communication, even if you don't build anything big and sophisticated right now, you do want to be communicating with your network, and you can do that via email. Right? It's easy enough. There are three things that you want to be saying. Number one, first of all, you want to upgrade your communications and be more communicative with your network of investors. And this is how you do it. Number one, you want to acknowledge what is going on and provide a high-level analysis of what you see is going on in the market today. Right? You can do this weekly because it's moving so quickly. The second part of your communication, I'm talking about the structure of your emails. The second part talks about how you are addressing the issues that there are currently in the market, right? How are you adapting to the circumstances? Because you want to inform your investors that you're aware of what's happening, and you want to inform them that you have taken steps to accommodate the changes that are occurring. If you can, reflect upon the systems that you put in place prior to the downturn that are kicking in now, that are protecting the work that you're doing, right? Considering the circumstances. And then the third part of your correspondence wants to keep an eye to the future in a sensitive way, because like the last downturn, people are suffering. Today, it's a very different kind of human tragedy. So you don't want to be tone deaf to that pain that there is in society. But it doesn't preclude you from alluding to the opportunities that may come so that you can tee up your investor network to be ready to respond when you do find those opportunities that inevitably will come down the pipeline. So that's basically how you want to be communicating now.
And Adam, how would people get a hold of you or find out more about you?
Well, so the best way to do that is to go to gowercrowd.com. So my last name is G-O. For anybody not looking at the video, wherever it is, and seeing it emblazoned behind my shoulder here on the screen, it's Gower Crowd, Gower crowd.com. And masses of resources there for developers raising money, for investors wanting to learn. I put out a white paper, not a white paper, guide, a very detailed guide on how to communicate right now. And there's also all kinds of resources there for everybody. I really advise you or recommend you take advantage of. I've worked very hard to create stuff. It's all free, basically, just to help you out during these hard times.
Okay, great. That's gowercrowd.com. And Adam, I really want to thank you for taking the time to talk about with us about opportunity, how to position ourselves for that by building our credibility online, putting out websites, content, things that will really help bring people into our kind of sphere who might potentially be investors with us. Because when the time comes and the opportunities are there, those who know how to raise the money are the ones who will be able to take advantage of those opportunities. So thank you very much. It's been a great conversation.
Brian, I really enjoyed it. Very kind of you to have me on. Thank you.
I want to thank everybody for listening to this episode. I'm your host, Brian Hamrick from Hamrick Investment Group, and you can find out more about me by going to higinvestor.com. That's higinvestor.com. And you can also ask questions and join us on Facebook by going to RPOA, Rental Property Owner and Real Estate Investor Podcast. This episode was sponsored by Green Property Management, managing everything from single-family homes to apartment complexes in the West Michigan area. Find out more at greenpropertymgt.com.
You've been listening to the Rental Property Owner and Real Estate Investor Podcast, brought to you by the Rental Property Owner Association. You can find out more at rpoaonline.org. If you enjoyed this podcast, please go to iTunes to subscribe, rate, and review.